Hello and welcome to Chart of the Day Cafe for Thursday, January 11th, 2018. Just want to read our disclaimer quickly. Trading stocks is a high level of risk and viewers should complete their own due diligence on any stock or underlying that they intend to own. 100% of the content of this video and communique is intended for journalistic and educational purposes only. This video and all indicators, strategies, and articles herein should not be construed as investment advice. Not making any recommendations, always for your further homework. Good morning, everybody. Sue here with video number 309 in our regular Tuesday-Thursday morning video series. Busy day ahead, so I'm going to jump right into our charts this morning. As always, I start with a look at the Russell Index, and for that I use the IWM, which is the ETF that represents the Russell 2000, and I like to step back and take a look at it on that 5-year monthly time frame, that bigger picture look. We've been keeping an eye on this pattern up here on the Russell. Now keep in mind these are monthly candles, but as we said on Tuesday, we are now up and over this area of prior resistance, now support, and the market still has a bullish orientation. Having said that, we identified this candle for last month, the month of December, saying that that was a little bit of an undecided candle. And the indicators that I use would suggest that the market might be getting a bit toppy here, so I'm going to be extra careful. But having said that, charts forward. So I'm going to move it away from the 5-year monthly to the 1-year weekly. Same wedge pattern, same black line that we're using as our support. Here's how it's looking so far on the weekly. So we had a positive week last week. And with any follow through today, tomorrow, we will get a positive looking candle on this week's candle as well. So I'm going to move it away from the weekly to the 3-month. From yesterday, price is up and over the blue line, which is the 8-day EMA, which we use as our guide. So with price up and over that 8-day EMA on the daily chart on the Russell, we are adding a new name to our watch list this morning. And so the chart I wanted to feature for you this morning is the Chemours Company, ticker symbol CC, trades on the New York Stock Exchange. They were actually spun off from DuPont in 2015. What I do is I screen for strong industries and then I look at the basket of stocks within those industries and look at their scores. And this one, I have to say, came up with brilliant, brilliant value and growth scores, the two things that I really look for. So specifically, Chemours is a specialty chemical company. They develop titanium technologies, fluoro products, and chemical solutions. You might want to tuck into it a little bit more if you're not familiar with the company. But as I mentioned, the value score is excellent, excellent, very high. Forecasted earnings growth rate going forward is 39%. It's got a current PE of 10.24, and it pays a small dividend of 1.33%. So with that, let's get back to the chart. We're looking at the 5-year monthly chart. First thing I want you to note is the beautiful uptrend on the 5-year monthly. And I've identified this area of support on the monthly chart, and I think it's looking kind of perky in this area. We will see. So I'm going to move it away from the 5-year monthly. I just wanted you to see where I'm picking up that area of support. Over to the 2-year weekly. And I like the way it's behaving in this area. And should this sector remain strong, with these scores, I would suggest that this one might be one to keep an eye on. So like the look of it here on the weekly. Now I'm going to zoom in and take a look at it on the 6-month daily. So it's moving off our area of support. It already has a 3 and 8 cross. So, you know, if you're a regular viewer, then you know I talk about the 3 and 8. So for me, it's all about price being up and over this blue line, which is the 8-day EMA. Love to see this kind of a price pattern. But to keep it super simple, you can just use the 3 and 8 and say when the 3 EMA, exponential moving average, moves above the 8, that is the trigger. So I want to zoom in and show you that this one already has that 3 and 8 look. Nice bullish candle yesterday, a little bit of volume coming in. So if it rises over here today, then that would be, for me, an interesting look on the chart. Just wanted to show you that 3 and 8 cross. I'm going to take away that. I don't like to look at cluttered charts, so I'm just going to go back to my plain study and show you area of support, and especially if you consider there's a little bit of a wedge pattern happening here. So breakout of this little wedge and into this area would be interesting for this company. Along with the chart we're looking at, we also like to take a look at the sector that it's in, and for that we're looking at the ETF XLB, which is for the materials sector, 2-year weekly chart. What I want you to note is that it's in a beautiful uptrend on the 2-year chart. Last week was a strong week with volume, and here we are so far for this week. So overall, the sector is looking strong. I also like to take a look at seasonality, and for that I go to equityclock.com, which is an excellent site, highly recommend it. I couldn't find a specific chart for CC, but I did find one for the chemicals industry overall. And as you can see, January has a little bit of a dip, but then in February it picks up and it has this strong push. So no guarantee that happens this year, but always good to know. Also, I like to take a look at FinViz and see if I've got analyst support for my pick. And here we're at that section of FinViz for CC. Overall, it's pretty positive. It did have a recent downgrade by Goldman, so you want to be aware of that. And I also would encourage you to skim through some of these articles. The one I'm going to include with today's video is this one. It would suggest that they are raising their prices. Oops, sorry about that. And that may be a catalyst for further revenue expansion. We will see. But this is a market realist article, and it's a recent one, so I'm going to include it with today's video as well. And so to summarize, let's go back and check the boxes. I started today's video with a look at the Russell Index, and we note that overall the Russell's in an uptrend with price currently up and over the 8-day EMA on the daily chart. Having said that, my indicators would suggest the market might be getting a bit toppy here, so we want to be extra careful. We looked at the sector that CC is in. We looked at XLB, which is the ETF for the materials sector. We note that it's in an uptrend on the 2-year chart and still showing that strength. We looked at the 5- and 2-year chart for CC. It's in a long-term uptrend, and on the smaller daily time frame, we noted that it's in an area of possible price continuation to the upside and support. We will see. It's got an excellent value score. Sometimes I say good, sometimes I say great. It's excellent value score. Excellent growth score with a forecasted earnings growth rate going forward of 39%. Pays a dividend of 1.33%, so that box is checked. It does have that 3 and 8 EMA cross, which we showed on the chart. It's got seasonality in its favor, and I'm going to leave this unchecked because it had a recent downgrade, but overall, for the most part, it seems to have analyst support, but I'm going to leave that up to you to decide. It's got a current PE of 10.24, and it looks as though earnings are on February 21st. As an addendum to today's video, I just wanted to highlight FANG, which we put forward. This was our Green Circle Day, video day for FANG, November 30th. Beautiful run since then. Hope you caught it. And then I wanted to also highlight for you JCI, Johnson Controls, which we put out on December 5th, video day here. Up and over the blue, came in, retested our support. It's lifted, and I think Johnson Controls is one to keep an eye on in this area as well for further lift off of this area. Check the scores on Johnson Controls this morning, and it still has that beautiful high value score I look for, forecasted earnings growth rate going forward of 22%. Dividend yield of 2.66%. These are all numbers updated to this morning, and a current PE of 13.95. So still like Johnson Controls very much. Thank you for watching today's video. If you like receiving these, please subscribe to my YouTube channel by hitting the red subscribe button on my YouTube homepage. Mine is white because I'm already a subscriber, but if you are not, yours will be red. I highly encourage you to subscribe because in 2018, what I'd like to do is figure out a way to convey to my viewers and subscribers when we get a fresh 3 and 8 cross on some of the charts we feature. So I'm going to work on that in the weeks ahead. With that, I will say thanks again for watching. Have a great weekend, and our next video, or my next video I should say, goes out on Tuesday.